Today, we're going to dig into something that's been a real head-scratcher for a lot of people. Why on earth does Bitcoin now seem to move every time the US Federal Reserve says anything? It wasn't always like this, but there's a very clear reason for it. So let's break down exactly how that connection works.
You've seen the headlines, right? The Fed hints that it might change interest rates, and boom, markets go wild. You see it in bonds, you see it in the dollar. But the really interesting part, Bitcoin, this asset that was supposed to be completely separate, is now moving right in lockstep with them.
And that's the big question, isn't it? I mean, this is an asset that was designed to be outside the whole traditional system. So this kind of synchronized dance seems weird. It feels counterintuitive. But if you can understand this, you can really see where Bitcoin fits into the whole financial picture today. Now, here's the most important thing to get. This reaction, it wasn't random. It wasn't just a bunch of people speculating. Nope. It was a direct response to a mechanism that's actually pretty predictable. There's a system behind all this, and we're going to pull back the curtain and show you exactly how it works.
Okay, so this brings us to what we're calling the liquidity bridge. This is the core idea, the mechanism that really connects everything.
Let's just put it out there as plainly as possible. It all comes down to one word: liquidity. That's the real bridge here. See, when the Fed speaks, it's not just about interest rates. It's really about how much money is sloshing around in the system. And that is what Bitcoin is now plugged into.
So, what do we even mean by liquidity? Well, it's a simple idea, but it's incredibly powerful. Just think of it as the total amount of cash and easy-to-get credit that's flowing through the financial world. It's basically the fuel that makes the whole engine of investment run.
And this whole thing unfolds like a domino effect, a chain reaction. It all starts with the Fed. Step one. They set the policies that control the flow of money. That directly impacts step two, financial liquidity. From there, the level of liquidity shapes step three, which is the market's risk appetite. You know, how willing investors are to buy riskier things like stocks or, Bitcoin. And the very last domino to fall? That's step four, Bitcoin's price, which moves based on all those conditions. It's a clear four-step flow from the Fed right down to your portfolio. Think of it this way. This relationship creates two very different climates. When liquidity is loose, there's just more money everywhere, and investors feel bold. They're more willing to take a chance on riskier assets. But when liquidity gets tight, money is suddenly scarce. That makes investors get way more careful, and capital starts pulling back from those same assets. So this new sensitivity to liquidity, that's the sign of a massive change for Bitcoin. It's gone from being this niche little asset that only cared about its own news to a real player in the global macroeconomic game. The difference between then and now is just night and day. A few years ago, what moved Bitcoin's price? Crypto news, a new partnership, a hack, a software update. But today, the biggest movers are huge macroeconomic things, like inflation reports and, of course, what we think the Fed is going to do next. It's a complete structural shift. So what caused this huge shift? Well, it's really three big things all happening at once. First, you've got the big players, the institutions, finally jumping in through regulated products. They bring a ton of money. Second, because of that, Bitcoin is now being traded on the very same desks that handle traditional assets like stocks and bonds. And third, because it's all being traded together, Bitcoin's reactions are starting to look a whole lot like other assets that are sensitive to the big economic picture. And when you piece all that together, you can really start to see the bigger picture emerge. Bitcoin is literally being redefined in real time. And it's not by the hype man or the critics. It's being redefined by the financial system itself.
And there's one final crucial piece to this puzzle that a lot of people miss: regulation. It might sound boring, but having clearer rules has been absolutely massive. It's kind of filtered out some of the wild speculation and made big, long-term investors feel more comfortable, pulling Bitcoin even deeper into the established financial world.
So let's just quickly recap the whole connection. You start with Federal Reserve policy. That sets the liquidity conditions. Those conditions are now accessible to huge institutions, and those institutions are operating within a much clearer regulatory system. See? It all links together. This isn't about predicting what the price will be tomorrow. It's about understanding how this asset actually works inside modern finance today. Which, of course, leads us to a really big final question. With all of this, the policy, the liquidity, the big institutions, is Bitcoin's fate now just permanently locked to the decisions made by central bankers? It's a huge question, and it really gets you thinking about what the future of money is actually going to look like.